Good morning, it's March 22nd and it's 8:54 a.m. Eastern Time. I'm Rich Possum for Critical Point. This is a morning brief of the grain markets, and we're going to stick with just the U.S. markets and keep this as brief as possible. What we have is the daily July corn futures chart, and we have a level 2 bottom. Now, level 2 is the second most important kind of bottom during a year. Its related trend will occur a few times a year, actually several times a year. And then about every other one of those is more important. It combines as something what we call the level 1. And the level 1 quite often can very well be the high of the year and the low of the year, but there is more than one occurrence of that during a year. And what we do with this modeling is we break down what are the major groups of market participants that are making this market move, and what are they up to. And this type of modeling can get to the point of explaining nearly all price fluctuation during a year. Whereas news analysis, the fundamental supply and demand analysis, sometimes only explains half of the price fluctuation during a year. So we think we're picking up on what people really want to do, plus what people are doing relative to the actual fundamentals of news. We're getting a more complete picture. And the fact that we can label all this creates like a clock-like model, so we know when it's time at midnight that we got to do something. Or another way of looking at it is like a missile tracking system coming into where we want to do something. So what the corn market is doing is that it's cycling in level 3 trends. The level 3 trader needed to buy more than sell, then they needed to sell more than buy, and they did it again, and they did it again. And then notice they were supposed to put it up and then down, but what they did was they put it up, put it all the way back again, then up again. So this level 3 is not working very well. It's getting sloppy on us. Why is that? Well, they're turning more short term. I think we've lost some market participants here who are waiting on the end of month planting intention reports and the quarterly stocks report. I think they're also looking out into April, May saying it looks like it's going to be great planting. And then they're also looking out into summer saying there's really no weather risk here, right at the moment at least, forecasting. However, they are looking at the very tight supply and demand balance sheet for corn and beans. And you could argue, even though it's not that way for wheat, the wheat market kind of behaves it can be. And then they're also looking at the dryness in the western half of the U.S., and some of that dryness is starting to work into like northwest Iowa, starting to work into the Corn Belt. Now, my stance on that is that western droughts don't normally become Corn Belt droughts. They don't normally become U.S. droughts. So it's questionable whether we're actually going to have a crop problem this year. But it is something to keep an eye on. They're still looking at South America, but they're now realizing, you know what? Brazil's starting to move product. It's going to China. It's going to the rest of the world. So those are some of the things we're putting in with this model analysis. The core model analysis saying we don't necessarily need to know what these people are doing. We need to know when they're putting money in and how long will they put it in and when are they going to take that money out. That's the most important fundamental. Next, we then want to try to compare it with all that fundamental news, the supply and demand, crop risk, the news cycle, the headlines, okay? So here's the model forecast. Although we're showing a level 3 top last week, ideally it should be now. So this market can pop. And there's a critical point, which is a type of tool I'll use, a little projection tool, saying if it will pop now, it has enough upside to get back to maybe around 543. And last week I warned you there'll be resistance in the 540s. I just don't see it any higher right now. In addition, the model's saying we probably, or I shouldn't we, the market probably put a bottom in around late last week for level 3. So the level 3 should have gone like this, okay? Instead, it did this, something more broken, chopping up. And I think it's because quite a few decided they didn't need to do too much, and the really faster type trader could make a bigger impact on the market. Okay. Now, I also think part of this reason is they want to wait on the end of month planting intention report. So I think ultimately this market's going down into the planting intention report, and if it doesn't go any higher than today and takes out the low of the prior 2 days, that critical point projection tool will say there is enough downside potential to think about a revisit of 522 to 520, something like that. It may go lower than that even. We have a bearish acting daily stochastic It is approaching mid-range, which is a level where you have to worry about or think about a secondary buy signal. But it also could be a secondary sell level where they just speed it on down to the oversold condition, which is normally where you get your better buy signals. So there's room to go down. It's hovering near the 5-day average. We want to watch that. It's trying to break out of this triangle formation, so that could be bullish. If it takes out the last week's high, we may have to reevaluate there whether there's something more bullish going on. So now what I'm doing is I'm mixing chart analysis, technical analysis, with the model opinion. The model opinion is not necessarily looking that much at technical, not the core model, but the expanded model, we want to look at anything and everything. All right, now what I want to do is I've given you some ideas of potential upside and downside. I've given you ideas I think is probably drifting lower and the model's favoring that. Now let's zoom out and look at some of the larger, more important trends. So we're going to flip to a weekly chart. So those level 3 trends now will look just like little pops and drops along the way, okay, during the month and every few weeks, all right? And the daily fluctuation, you can't even see it, all right? We're compressing things. And what we're seeing is this is the 5-week moving average. It's worked pretty good as a buy level. But will it work again? And the model's warning that even though we have a bullish acting indicator and it's widening spread and it turned to a buy signal at mid-range, we do have to consider they want to continue to put this market higher into a top in April. The problem is a less important bottom is due near the end of March to early April. And that's right in line with the planting intentions report at the end of the month. So I think ultimately they will sell this market back or at least move it sideways. It's at least going to have a difficult time moving up. I think they just want to set it back in that planned intention report. To get the report out of the way, we can get a bounce during April to at least a level 2 top, maybe something more important. But I don't know as we're going to have enough bullish information to keep it up there or put it up by a huge amount. Ultimately, I think they're then going to set it back into May for level 1 bottom. If all this forecast is correct, what it's telling us is we can use this as a clue of what's going to happen in the news, what's going to happen in the fundamentals. If the market is due to go down into the end of the month, it means they're more concerned about more acres in that planting intentions report than they are of less acres. And if this market's going to bounce in April, it's telling us, yes, we can get a bounce, but it's showing us we're running out of time to go up, so upside can be limited. And it is April after all. What could really make it all that bullish in April? It may not work that well. And since it's supposed to come down into perhaps a more important bottom in May, then there may still be more downside or more sideways action here into May. What would cause that? And the answer is there's a good chance we're going to have good planting weather. And that normally makes them nervous of a good crop. And for the moment, we don't have that forecast for a summer weather problem. It could occur. We do know the western half of the U.S. is dry, even with some of it in severe drought. Okay? So we want to watch for a revisit. What kind of downside do we have here? Well, there's potential to come back into the 530s. Okay, compared to 535 on that'd be the July, compared to 555 right now off the May, okay? And we know it can actually come all the way back to 505 or something like that into this level 2 drop. It could be that volatile, that bearish, okay? Now, so I fully understand why some would want to wait for this level 1 top to sell in April. But you just have to be concerned there can be some selling going into the end of the month here as they wait on this report. All right, let's flip to the soybeans now. Oh, I'm sorry. I want to go back to the May. I want to give you some farther out forecasts. I haven't been doing that well enough, I don't think. We do see an opportunity in late June to early July for at least a level 2 top. That's the second most important type of selling. And it may be level 1, meaning it could even be the high of the year. Okay? So what we have is that there could be, this market may very well trade to 629 to 659 this summer. That has to do with how tight things are, and it has to do with the chance that we could get at least a weather scare, at least put it up towards $6. And what if we actually got a crop problem? And we know the modeling is suggesting we can have problems from 2021 to 2024. There can be at least one crop problem during that time. It's not very helpful at picking the year right now, and it may not, okay? It's just a nice clue of some of the possibilities. All right, so that's our corn. Now let's get back to soybeans. So on soybeans, we want to watch the 5-day average as supportive resistance, a buy level, sell level, supply or demand level. It's trying to get above it today. But like the corn, the model's saying it should top this week for level 3 top and probably go lower into the end of the month for the planting intentions report. So it can revisit 1378 for the July beans. It may even trade as low as around 1366. Okay? But for the moment, it is up. There's no level 3 sell signal right now. It's just saying be watchful for a negative day. A down day could very well be the sign of a level 3 top, and it's moving lower. It's hesitating at mid-range. The daily stochastic has turned to neutral. It's flat. So the market's trying to make up its mind, is this a buy level or sell level? I think it's going to turn out to be a sell level. Now, if we're wrong, or let's say we're right, but it has to bounce a bit first, well, it may rally to about 14.15, recent resistance. Next resistance would be anywhere from, say, 12.25 on up to 14.45. I just don't see that this time around. I think it's got to go lower into the end of the month for the level 2. So now let's take a look at the weekly chart of soybeans. Huge bull market, correctly called it back in August to get on board. Actually, we called it in corn and said you better get on board for beans as well, even though beans had already started up. And we do have downside objectives here, 1380 or 79, 1379, 1336, 1298, but these all can be support levels, buy levels as well. They don't necessarily have to be breakdown levels where it's going lower still. It's hugging the 5-week average. Resistance, of course, is around 1460 for this continuous chart. We think it put in the second most important type of sell signal top 2 weeks ago. We think it's going lower in the late month. It's going to bounce in April and then going lower or at least sideways into May. But at the same time, like the corn market, we're thinking there's a good possibility it can rally this summer, which is why we also want to consider 1479, 1541, 1602 as potential upside later this summer. Is it going to continue to march higher? It may. They may not be that scared out of the planting intentions report. They may find that they're fine with those numbers. They've dialed them in, and they're more concerned of the tightness around the world. But keep in mind, Brazil is moving soybeans. This is a chart using a Reuters system. I think Karen Braun over at Reuters was tweeting this the other day. And so here's the ships coming out of Brazil round the tip of South Africa, and just heading on up to China. Look at the number of boats, and there hardly had been any a few weeks ago. So they are really starting to crank it up and move the beans. Okay. Now, also late last week, there was an article of a bank that is really concerned that there could still be explosive higher prices in commodities and higher inflation still. We have already seen some, but they're concerned just the way the supply and demand chains are working. And they showed quite a few charts that related to primarily China, but also a little of the world in terms of how tight things are, and we're just not putting people back to work fast enough here and get this flow going. So that's out there, and that's keeping people kind of on the bullish side here. So keep in mind, South America should become more bearish now because they're going to compete more. They're going to move that product. But at the same time, we've got this inflation story that's still here. We still have tight supplies in the U.S., and we still have a chance for a crop problem this year. Okay. So at any rate, that's what we're looking at on soybeans here. I could be wrong and it just continues to march higher in the summer, but I'm thinking we got some dips coming here along the way. Okay. Let's move on to wheat. And this is acting very bearish. They've given up on the whole idea of a crop problem to recent winter weather. They may be sorry a little later down the road, but at any rate, it is time for a little blip up in wheat this week into a level 3 top, something like this, okay? A little bit of a blip up. If we move out to the weekly chart of wheat, I keep lowering my upside objective here, but it is due for a little bit of a blip up, and it can be an important top, and then it's just going down lower into sometime April for an important bottom. So we'll see if it can find support at these recent lows around this current level, okay, around 624 right now. And this is a continuous chart operating off the Chicago SRW wheat futures. The weekly indicator is oversold, but it's a wide enough spread to warn there could still be a little lingering downside momentum here. Price action, okay? So I think it gives us at least a knee-jerk reaction before it goes lower. What they're doing is the seasonal pre-harvest pressure. They're preparing for the future harvest, and at the moment they're thinking things will be fine, there'll be enough supply. How low could it go? Maybe 6 to 580 over time. But my guess is we're going to get a bounce here in the next few weeks, or at least I hope so, so it shows the model somewhat right. Again, we keep lowering this upside objective here. All right, manage your risk relative to analysis others. And for those of you who are just coming on board, we've seen a lot new follower interest here. Subscribe, come on board. What we're going to try to do for you is find the first and second most important types of buy and sell signals you can use in cash markets, in futures hedging, in forward contracting, but it's going to be with an emphasis on the futures. That's what we're using as the primary tool here. And the point is we can give you these signals throughout the year to help build a good bottom line for a producer selling as well as a feed user or end user using a product. But the point is speculators can use this as well for trading the bigger swings during the year and make some money out of the market, okay? We do assess even more short term, but we're using that for information purposes more than anything. We like the idea of trading for these bigger swings during the year. And right today, what the model is saying is, yes, we got a chance for a little lower into the end of the month, but there's a chance for a little bounce in April. Maybe that'll give us an opportunity to do some forward marketing sales here. But it looks like most of this analysis is saying there's a good chance we can still get some kind of summer weather rally or scare to maybe get at least a little higher price. And because our separate crop modeling is warning of a crop problem anytime this year into 2024, who knows? Maybe we're going to have an explosive run this summer on top of this explosive run they've already seen since August of last year. Manage your risks relative to the analysis of others, because no one can be right all the time, as well as manage risk relative to your own analysis and decision making. And come on board, and I think you're going to find that when you get used to watching these charts and these model signals, it's going to raise confidence to put some of this to good use.